Well, good Friday to you all. It is August the 19th, year 2022. That means your weekend is almost here if you're a working person. If you're financially independent and you're off 7 days a week, on the weekend, what do? I usually try to stay away from stores, businesses, and vacation places. I'd rather go out during the weekdays. So when the general working population is off on weekends, places get more packed. So that's the beauty. I get a 5-day weekend and a 2-day weekend where I don't go out too much. Anyway, I'm Mazske Finance coming to you live here. Of course, I'm live, but you'll see it recorded. Anyway, I am not a CPA. I'm not an attorney. I'm definitely not a financial advisor, and I never tell you what to do. I just share stories and thoughts and opinions on what I think and what I do. So anyway, I'm going to talk a little bit about stocks versus real estate. And I've talked on this before, but the more I think about it, and I told someone this the other day when I was talking with a soon-to-be investor, is that I love the stock market. Gone back 30 some odd years, maybe not that long with individual stocks. I was in mutual funds first, but in 1999 I started buying individual stocks, 100% individual stocks, got out of mutual funds. And then I had a great run with stocks. I was working during that entire time. Knowing everything I know now, though, I made a huge mistake. Drastic mistake. Gigantic mistake. Going back to 1990, I made mistakes. I should have focused on real estate back in 1990. Granted, it would have been harder. I was in the Navy. I was stationed outside of the United States. It would have been harder. But when I was in Puerto Rico, that was a couple years after 1990, I did buy my first house. I was planning to live there, and I did eventually end up renting it, not knowing what I was doing, and the rent basically covered my mortgage. But knowing what I know now, I would have done things so much differently. I don't think I would have put a cent into the stock market. I'm not telling you to do that. I'm telling you to look at your portfolios. If you're a stock investor, and remember, I used to work for the Motley Fool, okay? I used to work for the Motley Fool. They're all about stock investing. If I was still putting money in the stock market, personally, I'd stop. I'd probably sell everything I have. I don't care if the market's up or down. I'd sell, and I'd put it all into real estate. Why? Because of this reason. With stocks, and there's multiple reasons why, but with stocks, different things. One, you have to put all of your money into the stocks. You can't borrow money from the bank, like 80% of the money from the bank. You put 100% of your money in, because if you buy on margin, it's extremely risky and foolhardy. Never buy on margin. Personally, I say don't buy stocks. But with that being said, you are not in control of your stocks. Yes, you can study the Motley Fool. Yes, you can look there, guys and gals there, do the hard work studying companies. But even with that, they don't work for those companies. They're not in the mind of the CEO. They can't say with 100% certainty they know what that company will do or can do. They cannot control the market. The stock market, you can have a great company and the price can linger for a long time. You can have a company with no earnings and the price will skyrocket. You can have a meme stock shoot up that there's nothing behind it. Just people trying to bid it up so they can take money out. Now, if they do that, hopefully they got enough sense that they stop doing it and put the money they made into real estate. Because more reasons why stocks versus real estate, why I think, and I will say emphatically, real estate wins hands down. With stocks, besides not being in control, besides having to put 100% of your money in to buy them, if you try to live off your stock investments, and I've read this many times over the years from the Fool, is that you want to sell stocks, keep them in something safe, so you don't have to depend on the market volatility over the short term, like the next 3 to 5 years. Keep, like it used to be, they used to say keep 5 years like in laddered CDs. The problem now is they don't pay anything. You're losing to inflation. And with stocks, I think I said it. just a couple sentences ago. To get the money, you have to sell your stocks. You sell them, you deplete them, you burn them down, let's say. Sure, if you're a great investor, maybe your stocks will keep growing, but you got to sell them. Now you may get dividends, but can you live off of, let's just say, 4 or 5% dividends? If you got a big pot of money, sure. Most Americans don't have a big pot of money. Most Americans are living paycheck to paycheck and maybe putting a little bit into their 401k. That's at the whim of the market, the whim of these unknown companies, the whim of whoever. Now with real estate, let's switch gears real quick. Real estate, what's the beauty of real estate? You can be 20 years old, buy your first rental house, and from day one, start cash flowing, positive cash flow. Now, if you want to retire younger, you don't spend that cash flow. You save it. And you save it with whatever money you're getting in your W-2 paycheck that you can save up to get your second property. And then you save that money and you get your third and you get your fourth. Now, along the way, you're going to have some road bumps. You're going to have some hiccups. You're going to have some bad things happen. You will have a tenant not pay you. And they may not pay you for several months. They may not pay you for 6 months. You may have to evict them. And that eviction may take 6 months. Okay? Depends on what state you're in. Laws vary from state to state. I've had to evict in the state of Virginia. In Alabama, somebody got evicted. I wasn't involved per se. The property manager and a lawyer handled it all. In Indiana, I've had tenants served eviction paperwork, but as of yet, I haven't had to evict somebody. They've either moved out or they've gotten caught up on rent and they straighten themselves out. But it will happen. It's a given. It will happen. So knowing that, and knowing, again, your tenant may mess up your property, may destroy it. You may have to spend $20,000 to rehab your house. So why do I still say emphatically that real estate will beat stocks? Because people need a place to live. And yes, you will get a bad tenant at times, no matter how well someone can screen them. It's just how it is. But by and large, the majority of your tenants will be decent people. By and large, the majority of your tenants will not destroy your property. A certain percentage of your tenants will stay for years and years and years. Okay, what that means is they're paying you rent. As long as you bought correctly, as long as you ran your numbers and you're positively cash flowing, you will do okay. And your tenant with that rent is paying down your mortgage for you. I have spreadsheets I use, and that's how I track everything. Because if I can't track it all up here, there's too much. But every month as I pay mortgages down, I have a new mortgage balance. I keep track of more or less the value of my property. It's not accurate, let's say, because it can change. But I try to keep track of it. But every time the tenant pays me, my mortgage, every month my mortgage is paid. No matter if they pay me or don't pay me, I still pay my mortgages. So every month I get just a little bit more equity in some of my houses. I have some cheap mortgages. My cheapest one is $143 a month that I pay. And that's not counting taxes and insurance. That's principal and interest. So my equity does not increase a lot each month. It might be, I don't know, $25, $30 that increase, but it increases. Okay, it does every month. It increases, and it increases more each month. It might only go up by 25 cents. It might go up by $1. It might go up by $10. Depends on the size of your mortgage. But every month it increases, and during the 30 years, as you cross over, 16, 17, 18 years, you're paying more and more and more and more towards principal and less and less and less towards interest. That's just how it's done. But now, along the way, you're getting cash flow. Along the way, rents will go up periodically. They may go up every year. We may go into a long recession and rents stagnate for 5, 6, 7, 8 years, but then they start going up again. Along the way, your principal and interest stay the same. Your tax and insurance may get tweaked. They may go up, they may go down. I've had both happen. Both taxes and insurance gone up, gone down. Normally they go up though. So that will happen, but principal and interest stay constant. But with the cash flow, if you have 4 houses and you're cash flowing $1,000, if you have 8 houses and you're cash flowing $2,000, well, as time goes on, that number is going to increase even more because of those rent increases. If you wait 30 years and you pay your mortgages off, it's going to increase even more because now you don't pay a mortgage. Okay? So let's say you're 20 years old, you're 30 years old, you're 40 years old, you're 50 years old, you're 60 years old, and you're still working a job. If you have, and I'll just generalize here, if I was 60 and I was working and I wanted to leave employment and I had $1 million in my 401k or in the stocks, I would do whatever I could to get that money and start buying real estate. Why? Because $1 million in stocks is not enough to live on for most people. You got the 4% rule, which is reality at say 3.6%, 3.7%, that you can withdraw each year hopefully without fear of running out of money as the rest of your life. But let's just say 4%. 4% of 1 million is $40,000 a year. Can you live on $40,000 a year? Can you pay health insurance on $40,000 a year? Can you pay your expenses on $40,000 a year? And if the market shifts and drops, what do? If your $1 million turns into $600,000, can you live on, I think it's $24,000 a year? Can you do that? Granted, you may have real estate. You may go through a recession where 25% of your tenants stop paying the rent. But let's say if you're retired, living off of your rentals, hopefully you have a cushion where 25% stop paying. You can handle it. As you grow as a real estate investor, you can selectively start paying off certain properties if you want. It's a comfort factor. Doesn't matter if you're young even. Doesn't matter if you love debt because you can leverage everything else. At some point, all investors need to make this decision. When do we start paying off our properties? Because by paying them off, they're ours, right? We still got to pay taxes, but they're ours. The bank can't take the house away no matter what happens. Okay? So it helps you sleep at night. So if you're a beginning investor and you're thinking, it'll be a long time till I'm at that point, think again. I went from 0 rentals to 25 rentals in just under 4 years. I never made a lot of money in my life. And I'm saying if I can do this, so can each of you, every single one of you. You can do it as well. If you work a high-paying job, well then, get more rentals faster because you can do it. All right? There's no reason why any of us can't do it unless we don't want to do it, unless we don't work a job, or unless we are just spending our money for whatever reason. And if we're spending our money, get a second job, get a third job, cut expenses. Where there's a will, there's a way. All right? All right. Lunch is being cooked. Salmon. I eat my bigger meal at lunch and eat basically a salad for dinner. I'm still losing weight. I've heard all my life it's hard to lose weight. Part of this is I'm just having fun with it, and part of it I'm just doing a test. Cut out sugar, reduce the size of my meals. Cut out added sugar that's in food, cut that food out, reduce the size of my meals. That's all I do. I'm losing weight. And I exercise. I haven't really increased my exercise, maybe just a tiny bit, but I'm still losing weight because I want to. And it's healthier to carry less weight around. It's healthier for my knees, my ankles, my hips, my back. Just as long as I keep toned up. So, anyway. All right. I'm going to sign out now. It's been long enough. We're almost at 15 minutes. So, y'all take care. Stay safe. Mazske will talk to you later. Bye.